Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another breaking down the trade. Today it's Invest Answers UPXI, March 20th, 2026, $5 synthetic long. Money. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you to increase your financial literacy to help put you and your family on that path to financial freedom. So with no further ado, let's jump right in. So here was the trade alert, and there were actually two trade alerts last week that Invest Answers did, one on the 24th and one on the 25th of July. He, on the first one, did not go into any detail on how he purchased UPXI, only that he was replacing his CYFRF with UPXI instead. It's a different Sol treasury company, Solana treasury company in place of CYFRF. He's now looking at UPXI. So in the second trade alert on the 25th, he said, "My goals are not your goals. I'm overweight Bitcoin proxies, but dabbling with small amounts of Solana proxies. I think Solana will do well in the second half of this year. UPXI and all Sol proxies got hammered in the last 24 hours. His thesis, the same as yesterday. UPXI is now selling at a credit to their Solana bag of nearly a 12% discount. He doubled down, reducing his synthetic long cost basis to $5.95. Remember, this is a tiny position for him, but is a large number of options. He bought and sold these, reducing his synthetic long break even to $5.95, firmly believing that when Solana spikes north of 200 again, UPXI will head back up." So that was from the most recent trade alert that Invest Answers put out. Here were the charts at the time. So in the upper left-hand corner, you can see that there was an 11.57% discount as far as the NAV premium was concerned. And again, what that means is they're holding more Solana. The Solana on their balance sheet is worth more than the market capitalization of the entire stock at the time. Bottom left-hand corner was what the Solana chart looked like. According again to Invest Answers, he said the Sol chart looks like it is going to head up from 179. In the upper right-hand corner, he said this is the UPXI Solana pair chart. So that's UPXI versus Solana, showing that it was undervalued, UPXI in relation to Solana. Or if you had Solana, you would sell Solana and buy UPXI if you were pair trading the two of those. And then he put in what the actual trade was itself. So he sold the $5 March 20th puts and bought the $5 March 20th call option. So he said, note BTO means buy to open and STO means sell to open, which we have talked about on numerous occasions on these trade alerts or these breaking down the trades. What I saw on UPXI's chart, I pulled up the chart. It's not one that I've looked at historically. I had never quite honestly even heard of it until the trade alerts came out this last week. You'll note they announced their first Solana buy back near the end of April. That caused the stock to spike from about $2.50, $3 all the way up to $22.46. It pulled back and spiked a second time to approximately that same level, again, right around 22, 22.50, and then tanked near the end of June. By June 20th, 24th, it tanked. Then you start seeing a green mean reversion dot right around the 25th, 26th of June. You see a buy signal right at the end of June, a green buy signal. You can see it lit up right above the MR where I put better buy here after mean reversion less than 2.0. So what I mean by that is the place to have bought UPXI ideally would be to follow the chart. And here you would have had all three of your indicators that you're looking at in IADSS telling you that it is a smoking buy at the time. You had a giant green mean reversion, more than 2 standard deviations below the norm. You had the green buy signal show up, and then the trend flipped to blue. It kind of went sideways for a few days, and by July the 3rd, the trend flipped blue. You'll note that I put IA's trade alert from the 25th, the one that he just put in there this last week. That's where he put out his trade alert with a price target of around $12. Now, had you purchased a December 19th, 2025 $2.50 synthetic long at the point where I noted it was a better buy. Again, it's a better buy because all 3 of the signals had shown up there. Green mean reversion, dot, greater than 2, minus 2 standard deviations, a green buy signal, and the trend flipping from orange to blue. The $2.50 synthetic long, that's the only thing they had. They had a $2.50 or a $5. The March contracts were not available yet, so the longest you could have bought out to would have been December 19th, 2025. It would have cost approximately 60 cents a share to put on that synthetic long. The break even would have been $3.10, and currently it would be worth $3.55. So the 60 cents that you paid for it would be worth $3.55 a share times 100 shares, or $355. That would have been a 5.9x in 3 weeks. That's where we are right now, not even including what would happen if it went to $12. Of course, as I put there, hindsight is 2020, and UPXI may not have even been on InvestAnswer's radar back then on July the 3rd. I know it certainly was not on mine. I hadn't even looked into the company prior to that, but if it's something that indeed you've been keeping an eye on for the last few months since they announced that first Solana buy, the best place to have done a synthetic long would have been on July the 3rd, and you would have been able to do a $2.50 December 19th, 2025 for around 60 cents a share. So let's continue breaking down James's trade, or InvestAnswer's trade. InvestAnswers sold the March 20th, 2026 UPXI put for approximately $2 a share, collecting $200. He needed $500 to collateralize the put due to assignment risk. What that means is the other party that he sold the put to can sell their UPXI shares to InvestAnswers for $5 a share times 100 shares, or $500. So he needs to have $500 in the form of cash or available margin, which is what he uses in his account. Due to the assignment risk, InvestAnswers bought the March 20th UPXI $5 calls for $2.50, spending $250. This resulted in a net debit of around 50 cents a share, or $50. But wait a second. In his trade alert, he put in there about 95 cents, right? Well, that's because this was the second set of synthetic longs that he had done in a matter of 2 days. He did not give the details of the synthetic long from the day prior, but it was likely close to $1.40 a share debit. How do I know this? Because if you add the $1.40 a share debit to the 50 cents a share, the break even on both of those trades would be $5.95 by March 20th, 2026. And that's what he said his break even was. Where did I get this from? $1.40 plus 50 cents, assuming he did the same number of synthetic longs on the 24th of July as he did on the 25th of July. And I know it may or may not have been. I had to make a couple of assumptions in order to make the numbers match. But he spent $1.40 on the 24th, 50 cents on the 25th. Divide that by 2, so an average of 95 cents a share is what he paid for these synthetic longs, added to the $5 strike price, and you've got $5.95 break even. Again, if some of this doesn't make sense to you, would be a great time to go ahead and sign up for the Understanding Options course that I put out there, where I cover all of these types of things. What you get when you sell a put, what the risks are, what a call option costs you, what the net either debit or credit is, how you determine break even, all of those things I cover and more. So, biggest risk, UPXI goes to zero, you're assigned the shares at $5 a share times 100 shares is $500. And let's say UPXI goes to zero, so those are worthless. Add that to the $95 95 cents a share, or $95 that you spent upfront to put the trade on in the first place. And the most you can lose in this trade for one contract, one synthetic long, is $595. Now, I guarantee you, Invest Answers did way more than one contract on these. So this is what it looks like on Optionstrat. Remember, there's my Optionstrat affiliate code, optionstrat.com/GDinero. I build all of my trades on Optionstrat so that I can visualize them and see if it goes to this amount, how much will it be worth? If it goes down to that amount, how much will it cost me? All of those things and more can be visualized very easily on Optionstrat. So again, if you want to save a couple of bucks, go to optionstrat.com and use my affiliate code /GDinero. Okay. So in his trade alert, Invest Answers mentioned that he had a price target of at least $12 by March of 2026 on UPXI. So that would be a 96% increase from where UPXI closed on Friday. And Friday of last week, it closed at $6.11. So $12 would be a 96% increase. That would mean that the puts would expire worthless, and the calls at $12 a share would be worth $7 a piece. He has $5 call options. He's saying that it goes to $12 a share. 12 minus 5 is $7, or $700 because you have to multiply it by 100 shares. How much did these trades cost him to put on? Remember, it was $95. So that would be a $605 profit. From $95 to $700 is a $605 profit, or a 7.4x return over the course of, what is that, about 9 months or so, approximately 237 days, according to the Optionstrat chart right there. Guys, I hope you found value in this today. If you did, make sure you like this video. Comment below. What did you like best? What did you learn today? That's even more important. What would you like to see more of? And make sure that you're subscribed to this channel so that you can see more videos of mine and other content like mine. Also, if you want to become a ninja, a chart ninja with TradingView, sign up for my TradingView and technical analysis class, where I teach you how to use TradingView and technical analysis to master your trading game at the end of the day. I also, like I mentioned before, have an understanding options course where I start with the terminology in the Greeks and I go up into complex option strategies like synthetic longs, synthetic shorts, bull call spreads, etc. All of that's available in my understanding options course at gdinerocoaching.com. And finally, I'm GDinero. I'm here to help you increase your financial literacy, to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time.